Hey guys, good evening, good afternoon from whatever part of the world you're joining me from. And I'm so glad it's yet another Sunday and we're streaming live again today, as we always do. So last week I had a bit of technical issues, so we couldn't stream live last week. So today we're going to be covering the topic of last week, this week. So that's what we're going to be doing today. So today we're going to be talking about risk management and protecting capital, right? Risk management, protecting capital. Now, last live stream, last session, we talked about liquidity sweep and I defined liquidity sweep. I told you guys why traders get trapped. So if you've not seen that video, go check it out. It's on my channel. But then I taught you guys a few other things like how to trade liquidity sweep. So today they're going to be talking about risk management. As simple as it sounds, this is the most important aspect of your trading career. This is the most important aspect because you can learn all the analysis, you can understand liquidity very well, you can understand everything about the technical side and the fundamental side of trading. And with the very bad risk management, you're not going to be successful. That's the truth. Now, let me explain what I mean by risk management. So first off, before we dive into the chat, before we dive into today's schedule, what we happen today. Now, I want you guys can hear me, drop number one in the chat box. You can hear me, drop number one in the chat box, and then go on and share this across your social media handles, Instagram, your Snapchat, WhatsApp status, and Facebook. Let me go ahead and do that on my end, and then we'll come back and dive in for the activity today. Yeah. So go ahead, let's share. Today is very, very loaded. Today is very, very loaded, guys. Today is very, very loaded. Share WhatsApp. Sorry. Sorry, just give me a few minutes. So just go ahead and share. Go ahead and share. Like in the chat. Oh. Just go ahead and share. Go ahead and share across all your social media while I'm sharing on my end. So I don't know, it's taking longer than before. Share. Come, let me share. You mind just share it right now. So yeah, now I want you to also hit the thumbs up button and subscribe if you're new here today. Yeah. So now, first of all, we're going to be talking about what is risk management, right? What is risk management? You might be wondering, what is like talking about today? What is risk management? Now, trading is all about risk, right? I told you guys risk to reward. So whatever you're risking, you're looking to make more. The greater the risk, the more the reward. And also the same way you stand to gain, that's the same way you stand to lose. So now today we're going to be talking about risk management. Now, what is risk management? Now, risk management is the process of controlling how much money you can lose in a trade. So one bad trade doesn't destroy your entire account. Yes, that's what risk management is. It's about controlling how much money you risk per trade. So that one trade does not destroy your entire account. Trading is consistently the variance. So you have to protect risk. You have to protect risks to be able to survive in the long run. Now, I don't know if you've heard of this saying that people usually say, "Do not cast all your eggs in one basket." Right? So that is exactly what risk management is all about. Not putting all your eggs in one basket. Now, let's say you have $100 account. You've funded an account with $100, right? Now, proper risk management would not permit you risking the entirety of that account on just one trade. All right. Now, when you risk everything on just that one trade, that is you casting all your eggs in one basket, and that's a very poor risk management. Okay. So risk management is about risking a specific percentage of your account per time in order to survive in the long run. Do you understand? So that is all I can tell you about risk management. So as we dive more deeper, you guys will get to understand too as well. So now, next thing we're going to be talking about is why risk management matters. Most traders they don't lose because they can't find entries or they don't understand their strategy. Their strategy is bad. That is not the case. Why they keep losing is because of poor risk management. Do you understand? Poor risk management. So that's why traders they keep losing trades back to back. Because now what they do is they have a very poor risk management. When they're losing, they lose big lot size and then lose a whole chunk of money. And then on a green day, they'll lose smaller size. And then now that way is never to recover back that loss. So that is it. Now here's what I do. I apply risk management to all my trades. That's why whenever I'm trading, for those of you that have been trading in my community with me, I don't use more than a specific amount of lot size. If I'm using 0.01, I just do two entries. If I'm using, that's just what I do. If I'm using 0.1, two entries, depending on the currency pair. So that is proper risk management. There are different approaches to risk management, and whatever works for you. For mine, I use lot size, a specific amount of lot size. For other people, they do position size calculation. There are apps for that, and I think I'm gonna show you guys one of the apps for that. But a small account, it's not necessary. Just use a decent amount of lot size, so that your wins can be controlled and so that your losses can be controlled and your wins are actually meaningful to you. Because small account trading is the get capital the better, right? The more tangible the profits. So now with a small account, you have to keep your losses minimal and that your wins can also be meaningful to you. So that's that. Now, the next thing I'm going to be talking about is advantages of proper risk management. What is the advantages of risking properly? What's the benefit? What would you get from it, right? So first of all, now, number one on my list is protect your trading capital. Protect trading capital. Now, for example, let's say you're a farmer, right? Now, since you're a farmer, you harvest your crops, right? You harvest whatever you planted. Now, proper risk management, permits that you save that capital. Sorry, you save your seeds, right? You don't throw away everything. You don't throw away every crop, right? Keep a little that you're going to replant again. So that's risk management. Keep a little that's going to enable you to trade the next day or the next trading day, as case may be. Do you understand? Now, number two is reduces emotional stress. That is number two. It reduces emotional stress. Sorry, excuse me. Sorry, hold on. It reduces emotional stress. Now, here's one thing about trading. Trading messes with mind, right? Messes with psychology. So now, whenever you use a very big lot size, a literally lot size, you won't be at peace because there's no peace for the weekend. You get. So whenever you use a limited amount of lot size, that if the trade goes against you, you're still going to be fine. Now, for example, you're taking a trade on USD JPY and GBP USD, and you have an account funded with about $100, $200, and you use 0.01 on USD JPY, right? Using 0.01 on USD JPY. Now, what's going to happen? Very relaxed, right? You'll be very, very relaxed, very relaxed. But when you use one standard on $100 account, and we know that one trade alone can wipe out your entire account. Every candle looks like a knife to your throat. Like every candle you see is like a knife to your throat. Like what's happening? Who's checking the phone? My drawdown. If you now profits, everything is just it looks like a threat. So that is number two. It reduces emotional stress. So the better risk management, the more calmer you are in drawdown or whenever you're taking a loss and you're losing streak. Now, number three, speaking about losing streak, helps you survive losing streak. Now, there are two types, there are two stages in trading. When you're on a winning streak and when you're on a losing streak, right? You're on a winning streak and you're on a losing streak. Now, here's what happens. Whenever you're on a winning streak, you're profitable, call out a trade, win the first one, win the second one, win the third one, just like that. The fourth one, like that, like that, like that. Now, whenever you're on the losing streak, whenever you're on a losing streak, it's very easy. You can call yourself profitable when you're on a winning streak because it's very easy. It boosts your confidence. You're all hyped up. You're winning trades. Now, the moment you're on a losing streak, what happens? Your psychology changes. It starts affecting you psychologically. Your confidence drops. You start feeling scared. You hesitate. You do crazy things because it has messed with your psychology. That's the bad thing about losing streak. Now, if you don't apply proper risk management, you will not survive the losing streak. And I'm going to be explaining deeper on that. I'm going to be sharing my experience with you guys. So I'm going to explain deeper on that. Yeah. So now, it allows, now, the fourth one is allows consistent growth, right? It allows consistent growth. Now, let me now, you guys should understand this. Whenever someone is building a house, right? Now, whenever someone is building a house, they don't just carry all the blocks and then dump it, immediately and you see a mansion. No, all the blocks are layered carefully and with purpose. Carefully, brick by brick, block by block, it's layered like that, like that, like that. Eventually, the house will stand. So, same thing applies to trading. You don't just carry all your eggs and dump in one basket. It's layered gradually, gradually. $10 today, $5 tomorrow. Maybe you lose $5 tomorrow. Next tomorrow, you make $7. Just like that. Gradually, 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 gradually. At the end of the day, you'll be profitable. Now, here's what I do. But here's how I trade. I'm not concerned about every trading day. Like I take a loss today, yeah, and I won't let it get to my heart. I'm only concerned about the week, the entire week. And I make sure at the end of the week, I'm definitely going to be profitable. That's all I can promise people trading with me. You take a loss today, that's fine. You take a loss tomorrow, that's fine. But at the end of the week, make sure we are profitable at the end of the week. That's all I'm after. Because trading is a war. Every day you don't get to win the battle. But at the end of the particular time which you're actually aiming for, that is when the war ends. Now for me, it's weekly. For you, it might be monthly, it might be bi-weekly, it might be quarterly, after 6 months. For some traders, it's after 6 months. For some people, it's after 3 months. Some people, it's a year for them. So me, I'm concerned about the week. How profitable am I going to stay by the end of the week? Even if it's just $1 after taking losses, just profitable. Even if it's just $1. So that's just how it is. It allows consistent growth. The proper risk management allows consistent growth. Now, let me explain. Let me explain to you guys now. If someone has a strategy of, a strategy win rate, a strategy with a win rate of 95%, and someone has a strategy, the win rate of just 60%, like me, myself, I don't have a very, very, very massive amount of win rate, and I'm between 60 to 65%. That's my win rate. Now, back it up with proper risk management, you're a decent trader. Now, let's say trader A, or okay, let me use John. Now, John has a win rate of 95% and lacks proper risk management. And me, on the other hand, have a win rate of 60% and I use proper risk management. Yeah. So what happens to John? John places the first trade. Now, mind you, we both have an account funded with $1,000. John places the first trade. It's everything he has because he's sure of his analysis, right? He's always sure. So if you place the first trade, he puts all his eggs in one basket, and maybe he doubles the account from $1,000 to $2,000. And then I take a loss for that day. Let's say I take a loss of about 5%. That's like $50. I take a loss that day. And what happens? Next day, place another trade, right? And he places another trade. And we place like, let's say 10 trades. And out of the 10 trades, I'm able to win 6. And each of that 6, I'm looking to risk 5%, right? You guys should stay with me. I'm risking 5%, that's $50. So since I'm risking 5%, losing 4 trades will be minus $200, right? And mind you, the way I trade is I'm risking 1 to make 2. So whatever I'm risking, I'm looking to make times 2 of that. So since I'm risking $50 per trade, I'm looking to make 100. Now, and I win 6. So that's 6 trades more, that is $600, right? So I've been able to, cover back that minus $200 loss I, incurred, still floating with a profit of about $400 or more, right? Now, John, on the other hand, he's up about 6,000 and he lacks proper risk management, just his analysis. And now, the last trade that John places, he packs all his eggs in one basket. So now, weeks and days and months of profitability is going to be entirely wiped out. It's going to wipe because now if he agrees account from $1,000 to $10,000, and anytime he trades, he lacks proper risk management, packs everything in one basket. What then happens? It doesn't work for him. He's going to lose the entirety of that money. Everything he has worked for, everything. He's going to lose everything in a couple of minutes or hours. Yeah. So that is that. So someone asked a question. Are there any demo apps I can recommend for practice? Yeah, there are lots of demo apps, and I can't be talking about that one now for today. So go and check the previous video. I think Forex for Beginners. That's the first live stream we ever had. So go and check it. I think I explained all that right there. So now that takes us to the consequences of poor risk management. Consequences of poor risk management. And number one of the most obvious one that I talked about is blown account, right? Blown account. Now, statistics has it that 90% of traders blow up their first 5 accounts. On the first account, your ever first account, you fund it, you blow it. Second one, you fund it, you blow it. Third one, you fund it, you blow it. I believe 4 accounts before I became profitable. I believe 4 accounts before I became very, very profitable. And the journey wasn't so nice. It wasn't so pleasing. But what kept me in the game was the first account I ever funded. I think that was back in 2023. That was $10, right? and they grew at $10 to about $40 with just one trade, trading BTC USD. So that actually, kept me in the game even when I blew those money. Yeah, it kept me in the game because I was like, I've actually seen money from this, and all I have to do is just learn the skill, become profitable, and at the end of the day, become profitable. So yeah, like I told you guys, loan accounts. Guys, now let's take John for example. John has lost a specific amount of money. Like he has, let's say he grew the account from 1,000 to 10K. And each trade he takes, he keeps risking everything. So the moment his capital is growing, he's still risking everything like that, like that, like that, like that. So eventually, the moment he gets 10K and he risks everything because he was like, okay, let me use this 10K to make another 10K. That's when, and then shit goes left. He's going to lose that entirety of that money. And me, on the other hand, I'm still going to have my 1K. I'm still going to be in profits. Unlike him, who actually made money and then lost everything. So that is not the same. You just have to pick the right side. So it's left for you. If you feel, 1,000 is too small because obviously there are people who $1,000 is actually very, very small for them. You understand? If you feel $10, you can be able to risk it. Fine and good. Whatever you feel, whatever you know that if that trade goes against you, you won't feel it. Like there are people who can fund an account with $10,000 and decide to like waste some money, become aggressive. They lose it. They won't actually feel it. So that is just how it is, right? They won't actually feel it. So now the next thing is emotional trading. Yeah, bring a bit to this one too as well. Now, forex management. For example, there was a particular time. I think this was it last year? I think 2024. Yeah, I found an account with about I think $100, right? So I created an account for $100 to about $220, and I was making profits on the winning streak consistently. And what happened? My confidence rose, right? So my confidence rose, and instead of I think I took about 4 trades that day, and I fall all 4 weeks. Instead of resting, I didn't rest. I kept on going, and I started multiple positions. That was like trading gold. I was, longing gold, and then immediately it started pulling back. $220 floating equity balance. I was floating equity was about 70 something dollars. I've lost a whole chunk of money, and I was in drawdown. Now, what happened? It got emotional. Never seen such an amount of loss before, like in drawdown. I've never seen that kind of amount because in drawdown, over $100 in drawdown. And it was like, if I lose the entirety of the money, let me close. And guess what? The trade eventually, reversed, and people did not even get to my stop loss. Reversed. The moment I closed, it was like, I believe you were watching me. The moment I closed, trade reversed. So that's it. Emotional trading. Now, what happened next? After I closed the trading drawdown, I closed trading loss. What happened next? I started revenge trading. I was looking to make back that money. I got upset. I was like, I can't lose this amount of money like this. I need to recover back this amount of money. Right. So that was what happened. Started trading emotionally, started revenge trading. And guess what? At the end of the day, I lost the entire amount. So that is what Forex management. And even I did 0.01 on that account and left it. That account would have survived longer. But then I was greedy, and I didn't apply risk management. I just start positions, just start. I was like, let me just make much money as I can. And eventually shit went left, and it didn't really do so well. So the next thing we're gonna be talking about is inconsistent results. Like I've told you guys about John. Now, John, throws in all his eggs in one basket. At the end of the day, one day won't work for him, and he's gonna lose everything. His results will be consistent, right? But unlike me, who has proper risk management, gradually, I'm getting there. And another thing is loss of confidence, like I told you guys. You know, when you don't apply proper risk management and you're on a losing streak, you take very, very big amount of losses consistently, consecutively. It affects your confidence as a trader. Me that, especially me, speaking of myself, that I actually call out my trades for people to take with me. Whenever I take back-to-back losing streak, normally with proper risk management, here's how it is. Proper risk management, I take back-to-back losses. What happens is that my confidence level drops. I start panicking. Now, guess what? I start feeling all these people taking trades as well with me. They'll also be taking this amount of. So back then, now what happens then? I take a break, relax, calm down, and actually, assess myself. What have I been doing wrong? You understand? So that is what I do. Now, what happens when I don't apply proper risk management? Now imagine I don't apply proper risk management. I take very huge amount of loss. It's gonna affect me psychologically. What happens next? I can't even collaborate properly for people again. I'll start messing up. And before you know, it will deep in brother. And so that's what I try to avoid. For those of you who are trading with me, you guys, whenever I post my result or screenshot my trade, you guys just 0.01 entries on gold. On gold. Now, let me show you guys something. Now, here's my NT. I think I funded this account last month. Yeah. So, uh, so I don't know if you guys can see. I don't know if you can see the deposit is about $500 right here. The deposit is about $500, and you can see my profit for about $448. So I've almost doubled this account. So all this trading happened about 2 weeks ago. I've not traded the whole of last week. I didn't trade because I told you guys it's NFP. So I didn't trade last week. Yeah. So I funded this account last month, I think about early last month. And you can see my trades right here. You can see all of them right here. And you can see I do take losses, but at the end of the day, told you guys for currency pairs, I do 0.1 on currency pairs, right? For currency pairs, I do 0.1 mini lot size, and then on gold, because gold and silver they move aggressive, they're volatile, right? I do 0.0123. That's my risk management. But some people, the other way they also do risk management is they use position size calculation. Now, what is position size calculation? It helps you calculate. Now, you give it, there are apps or sites you can use to do that. Now, you're going to impute your account balance, your risks, but your account balance, what you intend to risk per trade, and your pips in your pips amount. So that's what you do. Now, when you input it, now whenever I call it, for example, let me share my screen. I think I've been talking too much. Let me share my screen so that we get to see something. So, for example, the position size calculation, let's say, now how many pips was this trade? About 27 pips. Where was your entry price? Here, 4,000. My entry price was about 4,000. You can look at it right here. It's about 4,403. Now you're going to impute all this data on the position size calculator. Whenever you input that, you're going to see it's going to give you the exact lot size, the actual lot size to use. But to me, that is time consuming and it's very, very slow. And it's going to, stop my execution because price move actually waits for it to actually do all this. Price moves faster than you anticipate. Okay, you can see this trade right here that I marked out. This one, I think this was 2 weeks ago. And you can see it. This was where I wanted to get it from. Now imagine I was doing position size calculation. Straight up, you can see this, you can see the candle that fully after my entry. This aggressive candle. When the price go here, I won't have even gotten it again, but it's now very expensive for me to buy. So that is just it. So instead of doing position size calculation instead of calculating, imputing all this data. I just pick a particular lot size. 0.01, 2 entries, it wouldn't affect me, even if it hits stop loss. So that is just it. Now, the concept, now, some people might wonder, so if I'm doing 0.01 on both, why don't I do 0.01 on GPG? Now, I do not say you should follow me if you don't have capital. Now, here's what I do. On gold, I use 0.01 because gold is volatile. And currency pairs don't move so heavily as gold. So 20 pips currency pairs is not the same thing as it's not the same thing on gold because gold moves faster. It's more volatile, it's more aggressive. Gold can move like from 0 to like 100 pips in a couple of minutes, and that it takes currency pairs days to maybe a day or two to do that. Now, you can see, let me show you guys, let me take us to the chart. Now, let's see how many pips this entire move I got from this point is. See, it's about, you can see it's about 96 pips. Now, let's go to a currency pair. Let's go to GBP and let's see how 96 pips is actually GBP. Okay, this one is going to say, let's see, this is about 96 pips. From this point here, let's see. Can you see this is 96 pips? Now, let's say from this point, these are around, like check the time, this is around Friday, 5th June, right? 2 o'clock. It did about 94 pips. Okay, let's see, 94 pips for the reversal in how many hours? 11. So it took almost, so from 2 p.m. to 11 p.m. Now let's go back to gold and see how fast gold did that. Where's that move? Let's see how fast gold did that. It's around 130 to around for the reversal. You can see 130 to around 545, 1745. And can you see would cover that in a couple of hours, less than currency, less than GBP USD that is a currency pair. So that is just it. That is just it. Yeah, that's just it. Now, that is just it. Now next thing I'm going to be talking about is risk per trade. What is risk per trade? Risk per trade is the percentage value of your account inside your risks at every particular time consistently. Me, I don't have a particular percentage value risk, but I have a certain amount. Now, if I know that trade is going to be more than $100 per trade, the risk is like, okay, no, $100 is too much. $50 per trade per entry. I'm not going to take that trade because I normally do 2 entries. So my trade setups are usually like from gold, usually 20 to $30 risk per trade. So I just do 2 entries and I'm done. I'm out. I just execute 2 entries, 0.01, and I'm out. So that is just it. I don't change. I don't do all that. I just stick to 0.7 and do that consistently. You're going to actually make more money than making it all at once. So that's it. Now, the next thing I'm going to be teaching you guys how to apply proper risk management. How to apply proper risk management. Number one, you have to define your entry. After you guys analysis, you define your entry. And now, how do you define your entry? Proper technical analysis and fundamental analysis. That's how you define your entry. Proper technical and fundamental analysis. That's how you used to know where you're getting it from. That's how you used to know where and when you're getting it from. And next thing, not just your entry. The next point is your stop loss and take profits. Now, I tell you guys, we don't set stop loss based on emotions. I don't set stop loss because I feel I don't want to risk more than that. Or maybe the stop loss is about $50. And I feel like And let me just shrink it because it's more than what I intended, but I want to take the trade. No, if the risk is too much, just leave the trade. You have nothing to do with it. Just avoid it. Ditch the trade and move on. There are trading opportunities. Now, trading opportunities are like buses. Now, I don't know if you've ever boarded the bus. If you're going somewhere, even if you miss the first bus, second one, you always see a next one. So that's just how it is. If you miss the first bus, you always see a next bus. It's as simple as that. So you define your stop loss and your take profits. Now, you can see right here on the chart. You can see I define my stop loss right here. Let me select the stop. Select. Now you can see I define my stop loss right there, just below there. And my take profit was this level. And you can see it. I defined it easy peasy. Simple as that. Now, how did I define it? It's based on my analysis. Based on my analysis, I was able to define stop loss and my take profits. And I've told you I've done analysis about my strategy. I've done a video about my strategy. I've covered it. So when you here, you can just go and check it out. And different risk percentage or amount. So you guys, if the risk is too big, just avoid the trade. You just have to know it. That this is the amount I'm risking. This is the risk percentage, and so on and so forth. Next one should be it should be a decent risk to reward. Now, I thought you guys, my risk to reward is always 1:2. Whatever I'm risking, I'm looking to make times two of that. So if I'm risking $10, I'm looking to make 20. Risking 20, I'm looking to make 30. So that is just risk per trade, risk to reward. So if the trade cannot give me 1:2, at least I'm going to give the trade potentially cannot give me 1:2. I'm going to pass on it. Now, some of you might be wondering, but sometimes I do close trade before it gets to my take profit. Yes, I know I do that. It's for a reason. Now, here's what I do. Now, here's what I believe. If the trade does not have the possibility of giving me 1:2, I'm not going to take that trade. You understand? But if you can give me 1:2, I'm going to take the trade and I'm not going to mind if if I actually close it out halfway or in profit. I'm not minding because the trade has a higher probability of giving me 1:2. So that is just it. So that's risk to reward. Now we're going to be looking about beginners' mistakes. Yeah. So beginners' mistake that a lot of beginners do make bad time. Beginners' mistake. Now, number one beginner mistake is thinking winning is the goal. Now, a lot of beginners think winning is the goal. Yeah, they think I must win every trade to be profitable. To be a best trader, to be a very good trader, I must win every trade. No, you don't have to win every trade. I tell you guys, you just have to have decent amount of win rate and very good risk management. Trust me, you'll be fine. You'll be fine in the long run. Just decent amount of risk management and fine in the long run. So now, many beginners think you have to win every trade to be profitable. You don't have to win every trade. That's where risk reward comes in. That's where risk management comes in. You don't have to win everything because it's not even possible to win everything. Anyone who tells you that he has a win rate of 95%, or 90 something percent, or 100%, just tells you that person is a scammer. Person wants to scam you. Now, let me explain why. For 1 week, I can have a win rate of 100%. Now, do you know what the win rate of 100% is? Win rate of 100% is you took 4 trades for that week and you won all of them. That's a 100% win rate. You took 5 trades for that entire week. That's a 100% win rate. Now, yeah, you should be cautious is that it's not about 1 week, it's about the long term. How many trades or how consistent is that person's win rate for 3 months, for 6 months, for 8 months, for a year? If the person can win all trades for 6 months consecutively, back to back to back, then I will definitely agree with that person that okay, yes, he has a win rate. But I'm yet to see that kind of a trader that wins every trade back to back to back. It's not possible because even we that normally watch sports, watch football, which basketball, even the best teams currently, they don't win every match, they don't win every game. Some days they lose, some days they end the draws. That's how trading is. Some days you lose, some days it's it's break even. That's a draw. Taking it to football, it's a draw, or sports, it's a draw. When trading, it's break even. Some days you win. So it's just like that. Now you just have to make sure that trading is all about making sure that when you lose little, and when you're making money, you're actually making enough to recover back everything you lost. So that's how trading, and that's what it's all about. So the next point would be revenge trading. What you guys about revenge trading? A beginner trader is taking, you know, consecutive losses, or he took a loss, took a very, very big loss that made him so emotional because he lacked proper risk management, then tends to revenge trade. Now, here's how revenge trading works. Okay, if I tell you guys how revenge trading works, right? Now, here's something I call trader cycle of doom. It's like a cycle of doom. Now, here's what happens. For example, a snake is, crawling on, how snake move, like it crawls, 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 crawls. Now, a snake is crawling, and there's a saw, a very, very sharp saw, a very, very sharp saw. Now, what happens? The snake crawls over the saw, and the saw cuts the snake. Now, instead of the snake going its own way, right? Instead of the snake, moving on, what happens? Snake gets emotional, gets angry, and uses its mouth to bite the saw as hard as it can. And so cuts the snake further. Now, the snake gets upset further, so as cuts him. Now, what he does is he uses his body to wrap around the saw, trying to squeeze the life out of the saw. At the end of the day, the snake will have its body, with a lots of cuts if it doesn't even die. Now, let's bring it back to trading. It took a trade, took a loss, which is very normal. I want you guys to know that losses is part of the game. You cannot do without it. So if you think you come here with the mindset of, no worry, let me just learn, I'll be very profitable, I won't lose anything. Sorry, I'm sorry, but just leave us. Losses are part of the game. You understand? You have to lose. It's part of the game. Do you get? Now, that is it. Now, the snake eventually squeezes the saw and gets its body shattered completely. Gets its body shattered. Now, let's bring it back to trading. Take a loss. You get upset. Instead of, just shutting down and going, I have a rule. I'm looking to take 3 trades in a day. Potential 3 trades in a day. Now, why is it potential? Because if I take the first trade and that trade is a win for me, I'm out. I'm not trading again. I'm not calling another trade. But if I went behind and do my analysis and I spot out 3 different trades that are A plus setups for me that meets my criteria and everything, I'm going to call out those 3 trades. But if eventually I see only 2, I'm going to call out those 2. If I see 1, I'm going to call out 1. Now, if I take the best loss, I'm going to be looking to call out the second trade. That second trade is a win, fine, we are able to recover. If it's not, take a second loss for the day. And that's a kill switch for me. No more trading. That's my rule. I'm looking to take 3 trades potential. First one, if it's a win, I'm not taking any other trade. No matter how juicy the setup looks, I'm not taking any other trade again. I'm going to pack my things and leave the market. I've secured the bag for that day. I'm out. Because you might go to take a trade and then you lose what you've made earlier. So no, I don't do that. I normally do analysis in London sessions. So most of the times my London sessions are profitable. So I don't really need to look into the New York sessions at times. So that's it. So now what people do is they lose the first time. Instead of relaxing, they take a second loss. They get upset, they get emotional. They want to, I need to recover back this money. Maybe they're trading with expectations or something. I need to recover back this money, and they're forgetting tomorrow is another day. The market doesn't care whether you want to use that money to pay your mother's medical bills or you want to use it for something. It doesn't care, right? The market doesn't care. If you're not careful, you get your fingers burnt. Now, people tend to revenge trade, and eventually they keep losing money, and eventually they lose the entire rest of their account. And the next point is over trading. people don't just know when to stop. That's another thing. You know, revenge trading leads to bad trading. Confidence also leads to bad trading. You know, when you're winning, you don't just know when to stop. It boosts your confidence. I have to keep trading, 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 I have to keep trading. Eventually, you will start losing money. Once you start losing money, your confidence drops. Your confidence drops. What happens then? You start hesitating when you see perfect setups. You start, being emotional. Whenever you're on the trade, you close out of panic and stuff like that. So that's one of the dangers of trading. And number four, beginners they tend to increase lot size. Here's it. Here's what they do. After losses, they increase lot size. Now, with the mindset of I'm taking this loss, let me increase my lot size to recover. Now, I did that. I think 2 weeks ago. I didn't trade this last week. I did that 2 weeks ago. I think I took a loss. Let me see. Get my 25. History has a lot to tell us. It's time period. No, I'm streaming. Sorry. I'm streaming. I'm streaming. No, I'll do something when I'm done. So I think from 25th to 29th. Yeah. So 25th to 29th. Um, yeah, on 25th. On 25th, I took a loss. You can see it right here. You can see red on GBPJP. I took a loss, and on BTC, I was able to recover. Yeah. Okay, wait, let me just do it individually. So we get 6. So on 25th, this was a loss. Now, this loss was because it was, that it was bank, it was USD bank holiday and GBP bank holiday, and I wasn't aware, and they called that a trade. Eventually, they actually paid out fine, but I don't want to take that chance. I told everyone in my Telegram community to close out. Now, to the next day, which was on Tuesday, I was able to make this much on GBP J. Okay, GBP JPY. Okay, rather on BTC USD. GBP JPY, we closed the trade at break even, if I can remember clearly. Pushed up in profits, and eventually sword came to hit breaking. That's proper risk management. Breaking even your trades, tighten stop loss. That's what I normally do. I don't just call trades in my community. I tell them when to tighten stop loss, when to break even, and also when to close. So now that takes us to Wednesday. So Wednesday, my confidence was, above the roof, and I was like, my confidence was above the roof, and I was like, I need to make, I need to increase my lot size. So I normally do 2 entries. So the first entry I did, I took a sell on gold. You can see it here at the top. You guys can see it here. So I took a sell, normal 2 positions, right? And go hit, stop loss. Now I switched buyers. What happened then? Switch buyers for a buy. And you can see it's more than 2 entries. I don't know if you guys can see it. 1, 2, 3, 4, 5, 6, 7. I think over 8 entries because this loss got me upset. I was like, what just happened? I got in for a buy. I got in for a sell rather, and price started, whipsawing, and I told everyone to close out. We switched buyers. They gave me a buy, a buy confirmation, a buy buyer. So we got in for a buy. And what happened then? I stacked multiple positions just to recover back our loss and make profit on top. And eventually, it still whipsawed on me. And so I was able to. That's what brought about this loss of 133. Now, now the loss. Now, I was a victim of what I'm teaching you guys now. I didn't apply proper risk management. Now, as a trader, once in a while, you tend to get crazy. Right? Now, and I actually learned from that. On Thursday, I ended up breaking with -$2. I over traded because I was looking to make. I didn't want to end the week negative. I was looking to recover back now. So I over traded. I took So many trades. That's one thing. Exactly the same thing. So I'm not a victim of what I'm teaching you guys now. And we just lost $2. You can see -2. And then what happened? I relaxed, I calmed down, and I actually assessed what I've been doing for the past 2 weeks. And I figured out one at fault. I'm breaking my rules. I'm not applying proper risk management. And on Friday, which I actually eventually did, and you can see on Friday was the banger on gold. The 3 positions, proper risk management. And now if I show you my weekly, you know, from 25th to about 29th, you can see I made about $55. So that's all I'm concerned about. At the end of the week, I should be profitable. I should be profitable at the end of the week. Now, another beginner's mistake is removing stop loss. Now, here's what they do. They feel that trading with stop loss is very bad, right? Because the market is hunting them. They have this notion of the market is actually hunting them. That where they put their stop loss, where the market will go and so they will not trade, or just people they trade, they won't put stop loss. That's very bad. I cannot emphasize on that. It's going to leave the account being low. You don't have much time, just have about 10 more minutes. And the next thing is FOMO entries. Now, what does FOMO stand for? It's fear of missing out entries. Now, they see a setup and they have this mindset of, I have to get in now. When the setup is not ready yet, I have to get in now, I have to get in now. If I'll miss this entry. I know so many bars had that, as always, some people always do struggle with FOMO. Sometimes I do struggle with it, sometimes, but not all the time. I have this mindset of, I have to get in, I have to get in, I have to get in before I miss it. Now, here's what I do. I always wait. Whenever I see, a W pattern forming, I always wait. Since I'm a 15 minutes trade, that's why I get my entries. I always wait to, allow the candlestick to close 15 minutes later. It takes 15 minutes for the candle to close. So I'll allow it to close. And then once it closes, I get in. So that's what I do. Now, I think we've come to the end of today's class. And I want to leave you guys with something I call the survival mindset. Now, your first goal as a trader or as a beginner, as a trader, it's not about making money. It's about surviving long enough to make that money you want to make. So if you have this mindset of I want to make money first, sorry, you have to survive long enough to make money. Now, here's what I mean. Whenever you fund an account as a trader, just know that money does not belong to you anymore. It belongs to me, it belongs to every other trader on the other side of the market. Now, here's what you do. You have to fight to survive, protect yourself, to make money. Now, how do you do that? Proper risk. That's your edge. Proper risk management. That's how you survive. That's how you stay in the game long enough to be skilled to actually learn the skill of trading. So risk management is not only about money management. It's not also about trading. Not only about trading management. It's also about self-management, managing your impulses, greed and fear. That is it. Greed and fear. So I guess we've come to the end of today's class, and I want to know if there's any questions. So if there's any questions, I know you guys now is the time to ask me a question. Okay, I think this question, let me just reply to this one. So yeah, there are apps you can use, right? We have MT4, MT5, and now, okay, let me start from the beginning. We have three apps we normally use for trading: TradingView, MT5, MT4, and XNES or whatever broker you're going to use it. Now, what is a broker? A broker is like your bank, your OP, your UBA, your WEMA, whatever bank it is. Now, XNES is a broker. Now, what do you do on XNES? That's where you get to deposit some money, and that's where you get to withdraw from. That is a brokerage account, just like your OP. That's the job of the broker. You don't really spend time there. You only go there when you want to withdraw and when you want to actually fund an account. Or maybe if you want to demo trade too, you can give you paper money, you demo trade, practice, you learn the skill before you're confident enough to fund your life money. Now the next app is MT5. Now, your MT5 or MT4 you get to link your brokerage account to the MC5, you connect it. That's where you get to spend most of your time, or that's where you get to spend your time, not actually most of your time. That's where you get to spend time as a trader. The other app where we spend majority of our time that matters the most is TradingView, and which is the app you're seeing I shared on my screen. This one here. This one is for PC, so you guys can see this one is for PC. You can also go to Play Store or Apple Store and download it. It's also there. There's also one for mobile. So that is TradingView. So these are the apps you use. So here, what we do here is this is where we use to do our analysis and get to tell us when it's the right time to buy, when it's the right time to sell, and so on and so forth. So that is the app we use, right? So I doubt there's any other question coming in. Doubt there's any other question coming in. So yeah. So I guess come to the end of today's live stream. Yeah, I think that's all about proper risk management. And that's all about proper risk management. So if you want to be a part of my Telegram community, the link is in the description of this video below. So just click it and be a part of it. I get to share my insights as a trader on what's currently happening in the market, and my DM is also open. If you have any question, any trading related questions, you can also drop it DM on Telegram or Instagram, anyone preferably to you. So always remember, today's a new day to become a better you. So I'm gonna see you guys next week Sunday, same time, 6:30, and